Welcome back to the Festival of Urbanism. I'm Sophia Malson, but before we begin our proceedings here today, I would like to acknowledge and pay respect to the traditional owners of the land on which we meet, the Gadigal people of the Eora Nation. It is upon their ancestral lands that the University of Sydney is built, and I pay my respects to elders past, present and emerging. And to kick things off in the chat today, we'd really appreciate it if you could type in which country you're joining us from for today's session. It's been a busy week in the studio. I certainly feel like I haven't left in the last 24 hours, but just as well because I don't want to miss today's guest, which is Dr. Cameron Murray, and he'll be joining us today via Zoom. Dr. Murray is a research fellow in the Halloran Trust at the University of Sydney. Cameron will be talking to us about spotting bad housing economics. And for those of you who are big fans of Edward Glazer's work, you might find some of his content today quite interesting. So a bit of housekeeping, just as we let Cameron share his screen. We will first open the floor to questions after Cameron's presentation. He'll be talking for about 40 minutes. So we would ask you to post your questions in the chat box. And you can also post any comments that you have in there as well. Some of which will be recorded in the festival monograph. So I'd now like to hand over to Cameron to talk to us today.
Thanks, Sophia. I hope everyone can hear me. Please yell out if there are any issues. What's the plan from me today? Why are you here? The way I'm sort of describing what's going to happen is I'm going to share with you all my journey on how I learned to spot bad housing economics. And that involves three sort of steps. Firstly, there's a story of an insane method of understanding housing supply that gave me a window into how prevalent bad economics is in the housing discourse. I'm going to explain how the bad economics also claims that land banking that occurs, that's developers holding large stocks of developable land, undeveloped. I'm going to explain how bad economics blames planning for that. And I'm going to talk about some new ways of thinking, what a good housing economics would look like, especially when it comes to understanding housing supply. So what's this insane method? As Sophia mentioned, if you're a fan of Glazer, you probably know of this 2003 paper called The Impact of Building Restrictions on Housing Affordability. I say that because it's been cited nearly 1,000 times. Every paper, report, and article on housing supply and the scale of the cost of planning, the economic cost, seems to want to cite this paper uncritically. But it's one of those crazy situations where the method used in this paper is insane. That's how I describe it. And what's crazy about it is that when it was first published in 2003, it was accompanied by a commentary by Brendan O'Flaherty. His commentary said this method is crazy. It will go nowhere. It doesn't measure what it says. Go back and rethink it. And yet that critique was ignored. 3 citations, excluding my own, for that commentary that said the method was nonsense compared to nearly 1,000. A couple of years later, some Canadians also critiqued the method and said this doesn't say what it says. But the crazy part is it's been ignored. And then Ed Glazer, with some co-authors a couple of years later, used basically a derivative of that method to explain why apartment prices are high. Well, that's what they claim it says. It's got over 750 citations. And if you look at any recent paper on housing supply, these are approvingly cited, uncritically cited, and in many ways are thought to be foundational of modern housing economics. This is how pervasive this method is. Here's the couple of papers by the Reserve Bank. You may have heard me criticize the method a couple of years ago, but that doesn't seem to stop it, because just this year, there was another replication of the method to deal with apartments released by the Reserve Bank. There are think tanks in New Zealand, and there's broad media promotion of these results because they seem so shocking hundreds of thousands of dollars added to the buying cost of apartments because of zoning. So I just want to extract a key. There are essentially 3 paragraphs of that Glazer paper in 2003 that reveal that the foundation of the method makes very little sense. And this text here is a direct quote from that paper. And he says, it's noteworthy that we do not focus on the housing demand side of the cost equilibrium. Instead, we focus on the role of housing supply. And he says this contrasts with the classical economics approach. So in the classic approach, when there is a great deal of demand for certain areas and land in that area is scarce, then it is naturally limited in supply, and hence it has a high value. He then says, well, I reject centuries of economics of land. And our alternative view is that homes are expensive in high-cost areas primarily due to regulation or zoning. According to this completely alternative and contradictory view, there is plenty of land in high-cost areas, and in principle, new construction might be able to push the cost of houses down to physical construction costs. This graph on the right is partly to help explain, but I don't want to dwell on it. But we have to understand what that means. If the price of housing is the construction cost alone, what does that imply about the value of land? It implies that land should be valueless, correct? If houses only cost construction costs, then you can go and buy sites anywhere. So the puzzle, therefore, is why does land have a positive value at all? This method says that, except for zoning, it shouldn't have. So what do they do? I'm going to try and sort of simply explain it, because when you explain it simply, rather than in economics jargon, you can see why it's a classic example of bad housing economics. So what they say is that if the marginal price of land is lower than the average price, there is an arbitrage opportunity to assemble pieces of land at the margin into new lots and sell them at the higher average price. If this does not happen, regulations are likely to be constraining this arbitrage opportunity. Okay, that's the jargon. What does that mean in economics? Let's just do the simplest example. There are 2 houses, detached houses on 2 lots. One's a 300 square meter lot, one's 305 square meter. The market price of the slightly bigger lot is 601,500. Okay, so that construction cost of the house is 300,000. So the land value of these 2 sites, the slightly larger site is 301,500, and the slightly smaller one is 300,000. So that's the land value. And recall that this method says that if the marginal price is below the average, then regulations are to blame. So what's the average land price? Well, in this site, the 305 square meter one, it's $989 a square meter. And in the very slightly larger one, it's $1,000 a square meter. But the marginal land is just those 5 extra square meters. How much did the person pay for those 5 extra square meters for the larger lot? Well, they paid $1,500 or $300 a square meter. And the fact that this marginal price is much lower than the average, according to Glazer, it says there's clear evidence that zoning is constraining supply, because you should be able to go and buy 5 square meters off a bunch of different housing lots and build a house on it. So if you look at this little map I produced on the right here, all those little red dots are the marginal pieces of land on a housing lot, the corners, the back corners, the sides, you know, those little extra bits. And Glazer's reasoning is, oh, well, you know, if not for zoning, someone could go and buy all those random different tiny pieces of land and build houses on them. Therefore, it's zoning. Therefore, I'm right. And nobody seems to have been critical of this, except those 2 original critiques and me. The rest of the housing economics fraternity doesn't seem to care that it's wrong. So as you can tell, you know, what's bad about this? Well, land is not a quantity. You can't buy 500 1 square meter parcels of land in different locations and build your house on it. That should be obvious that's true whether there's zoning, planning, or anything. You know, this is a natural feature of the properties title system. Housing lots come in lumps. So even if you have a plot of land and you're subdividing that lot into different housing lots, it's not clear that you can always get each housing lot the perfect size so that the average and marginal costs are equal. There's going to be geographic constraints and access issues. And, you know, like we saw on that map here, you know, there are lots of different sizes for many reasons. You might decide that there is a market for corner lots, and it's more efficient to have larger lots on the corners with the 2-street access. You know, there's many good demand side reasons for this, but if you throw them out as the basis of your theory, you're left with a pretty uninformative approach to housing economics. Even if you could subdivide housing lots at the optimal price today, when the price changes, they'll be suboptimal and you'll get a marginal price below that average price. So what's the story? Where's my journey into bad housing economics go from here? Well, when I saw this method replicated, and to be honest, when I had somewhat taken Glazer's results uncritically as well, because everyone's citing them. It seems to make some intuitive sense, but when the Reserve Bank came out with their method, I thought, oh, I better take a deeper look. And when I realized what they were saying, I thought this was crazy. So the first thing I did to demonstrate it's crazy is I went to the Queensland Archives, went and got all the microfilm, and I hand transcribed the records from the 1850s land sales and found that, do you know what? See, this graph looks a lot like the other one. You can find the same result in the 1850s in Queensland, where there was no zoning, there were no constraints, and the population of the whole state was 17,000 people. Now, you know, either it's true that zoning is constraining supply today and causing large price effects for the price of houses in Sydney. And if that's true, then you have to also believe that it was constraining supply in the 1850s in Queensland. And I actually went further than this. I found a paper from some archaeologists on ancient land transaction records that they had translated from clay tablets from archaeological digs that recorded the price and size of land transactions in ancient Mesopotamia, thousands of years BC. And do you know what? Once I transcribed that data and I ran the model, there too, there was a zoning constraining supply, and that's what this method showed. So I don't think it's that interesting. And you know, I don't want to spend a lot of time on the econometrics, but there's a good reason for this, and that is that as land lots at an individual location get bigger, the value to a buyer declines. So if you just look at the right panel here, the blue line is the total value a household gets from a lot of a particular size. So if we're down in the left corner, you know, and you've got 30 square meter lots of land, you know, you can't do a lot with it. Adding more size to that lot increases its value more than what the current value is. So you get that upward sloping shape. And then once you get above the optimal, which is that dotted line here, the additional land is worth less. So it flattens off on the demand side. And if all the land in your data is historical land subdivisions in a city, they're all going to be slightly bigger than the current optimal size. And so they're all going to be up here, and you're going to find that slope just as you found in the data in 1850s in Queensland. It's an automatic product of the method. I mean, so the method is not saying what it says. It's what the authors claim it says. But that's not really an issue, because what I've learned is that popularity and prestige can become a proxy for correctness. A Harvard professor saying things that many vested interests like to hear, such as that zoning increases housing prices, regulation and red tape is a problem, that's an unstoppable force. I even had the experience of submitting a critique of this paper to a journal and had a reviewer argue to me that Glazer's method can't be what I say it is, because that would be crazy. he said, no, Glazer's method is not what you're saying. It's something totally different. I'm like, well, I just quoted Glazer's description of his method back to them. And so the acolytes twist themselves in knots to defend the reputation. It's very hard. There's a trap here in academia. It's very surprisingly difficult to change path and improve on knowledge. People get a bit attached to their methods. And you know, to continue my journey and my warning, this is a quote from another reviewer. And they said, you know what was interesting? The early critiques of this method were ignored, and their authors probably didn't notice because they thought the method was too ditzy to go anywhere. This is a foundational method in housing economics in 2020. Okay, 17 years later, it's foundational. And the first two authors who critiqued it thought it was too ditzy to go anywhere. The problem, of course, is that to change that, we have this group mentality. I have to prove myself part of the brotherhood, not an outsider or rabble rouser, if I'm to change people's opinions of this method to which so much prestige has been attached. So that's what I think is, you know, that's the first part of my story into spotting bad housing economics. And since I began this journey, I've now published a very extended critique into the method in the journal Environment and Planning A. And the question I now ponder is whether this critique also will be ignored, simply because of the intellectual momentum in the discipline and the fact that if zoning doesn't have large price effects on housing and people don't want to blame, you know, big macro factors like monetary policy, interest rates, bank credit and stuff, then they're lost for excuses. So I'll be interested to see what happens in the next 10 years and see whether my method's ignored. So what's the second part of my journey? One of the other sort of bad economics approaches I've seen is that many right-wing think tanks, many lobby groups, many economists, in fact, I've discussed housing supply with, argue that developers don't land bank. They only hold the necessary sites they need as inventory because the planning system is the problem, and they have to do this because of the planning system. You know, if the planning system was more efficient, developers wouldn't own large land banks. They would just buy, build, sell. They wouldn't hold these large inventories. This is a very common view. Google it, I guess. Here's some quotes from the CEO of the Property Council. All developers who are listed want to get that land onto the market as quickly as possible. They want to produce as much supply as possible, but the whole system is rigged against it. Very interesting. Very interesting, Peter Verver, CEO. I think you're lying. Here's what the Stockland CEO Andrew Whitson said to Stu Lin Tan and was reported in the AFR. It is costly and inefficient for developers to hold inactive land. Is it really, Andrew? Is it really? I was puzzled by this because I used to work for property developers and there was never a rush. I remember working for a developer who bought a site in 2006. And they could have applied for a planning approval that complied with the plan, and they could have begun their subdivision within a year. Instead, they chose to apply for something that was completely outside of the plan, needed radical changes, and were happy to wait a decade to get it. So the idea that developers are rushing around building as fast as possible made no sense to me. But how could I prove that? How could I demonstrate that the reasoning was wrong and that developers were lying? The main way is that listed developers, you know, publicly listed developers like Lendlease and Stockland and so forth, when they write their annual reports, they're obliged to be honest to their investors. They can't lie and deceive their investors in their reporting. You know, there's a whole apparatus in force to stop that. So why don't we look at the annual reports and see if they tell investors that they're building as quickly as they can, but it's the planning system that's holding them back. And if not for that, they would build everything in their land bank as soon as they could. Couldn't find any of that. I looked at the top 12 listed housing developers. I looked at the maximum number of annual reports I could find online, which was about 10 to 15 years worth of each of them. So that's over 100 annual reports, and not once was it mentioned. This is what they actually say. Lendlease says, we have almost $26,000 pipeline of apartment units. So we own sites where we could build 26,000 apartment units within the current zoning. Okay, they always report their supply based on the currently expected lot yield through the planning system, not their speculative lot supply if the planning system changes. And that's going to support their target of delivering 1,000 to 2,000 apartments per year. Now that's puzzling, right? To have a target that is 1/25, 4% of your inventory. Let's look what they say about their detached housing lots. They have 52,000 of them, and they only plan to sell 3,000 a year. That's interesting. That's 16, 17 years worth. Now that's a very big inventory for someone to hold. I don't know what other types of industries hold 15 years worth of inventory for large capital goods like dwellings, but they do. And they say, well, it's because it's not really an inventory, is it? It provides us with the flexibility to be disciplined and patient in pursuit of future opportunities. And what they say is that they manage these housing lots as assets. That's why they're not in a hurry, because it's an asset. It's on their balance sheet. They like it. Its value goes up without having to build housing. Look at Lendlease's latest report. They now have a land bank of 56,000 units, and they still only want to sell 1,000 or 2,000 a year. That's a bit of a puzzle, right? 25 to 50 years worth of inventory. Here's a bit of a summary of that data that I collected. Stockland had an average land bank of 67,000 housing lots, apartments and unit lots, apartments and detached housing lots. But they only sold 5,000 a year. It's 13 years worth. Lendlease had 46,000 in their land bank and only sold less than 3,000 a year over this period. Doesn't look a lot like inventory to me. And I ran a bunch of tests and said, well, what would it look like? If you were, here's your total land bank. If we look at the left-hand graph and the total lots you supplied that year, if you were supplying everything you could as quickly as you can, you'd have within 1 year, you'd be down, all these points would be on this dotted orange line down here. Land banks would be much, much lower for each rate of new housing supply, lots per year. Okay, so that's pretty critical. So I ran a bunch of tests to show that. I thought what was also interesting when you look at their annual reports is that in 1 year they can sell 2,000 homes, and in the next 7,000 homes, and then they decline back to 3,000. And the question is, if they are really selling as fast as they can, why can they sell 7,000 lots 1 year and not just sustain that rate of sales, since they have 56,000 lots on their balance sheet? That's a bit of a puzzle in my view with that. So the reasoning, so I put together all this evidence in a paper, and the reasoning is that undeveloped land is an asset that rises in value with the housing price, even if you don't develop it. And if you are a housing developer, the last thing you want to do is flood the market with new dwellings, depressing the price and reducing the value of your balance sheet. These companies value their land banks at billions of dollars. 4 billion for Stockland, 6 billion for Lendlease, whatever that number is. If you flooded the local market with new housing to depress the prices, you are destroying value for your investors. And there are other studies that confirm this. Woodcock and co-authors looked at all the sites in an upzoned area in Melbourne and said, developers anticipate that the planning system will ultimately approve significant increases in height and densities, and that on approvals gained but undeveloped can produce significant capital gains that can be cashed without construction. A study by Murphy said that rising prices make building today more attractive, but also make waiting more attractive, thus reducing the responsiveness to price. So you can see that once you start to unpick these claims that developers are in the business of flooding the market, they're just like any, producer of other goods and services, not asset managers of large sites of land. You sort of end up reasoning incorrectly about what's going on. So this attitude, though, still pervades the policy discussion. In the UK, for example, there was the Letwin report a couple of years ago that looked into this, and they discovered that this absorption rate was the issue. Developers don't want to flood the market and depress prices, and that's what limits their rate of supply. And yet you can see in that report that these politically appointed inquiry staff, they didn't want to say that, hey, there's this conflict here between faster housing supply and maximizing the value of your site that you're developing. So that's the second example. This is the third. A third one involves the Yinbi movement. If you've been following the debate, there's a heated debate in California about rezoning for higher density as a way to combat house price growth. You can see in New Zealand, Auckland recently enacted a large-scale planning reform with the intention of combating high house prices. The question I have is, well, I've lived in Brisbane my life, I've worked in the development industry, and all I've seen is large-scale rezoning for higher density. Every year there's more large-scale rezoning for higher density. Can we actually observe a price effect from that? Where we have tried these types of policy changes? Or are these just stories that we tell with the help of some bad economics? So this is a current project I'm working on, and I'm looking across 19 high density infill areas in Southeast Queensland. In these areas, there are 25,000 sites, so that's lots. And my co-author, Mark Lim at QUT, collected data from 1996 to 2016, in 5-year increments on every single site in a 1,200 metre walking catchment of the main transit node in each of these areas. One of the interesting things that he put together with the help of historical aerial photos and Google Street Views and various development application records is the number of dwellings on the site in each time period, the current zoning based on the plan that applied at that period of time and what the highest use was, and when the use changed to a higher value use. So for example, when a house was demolished for an apartment building or when a house was subdivided. And so what that allows us to look at is when the zoning changes to allow more density, does the supply respond, and can you see these price effects that are meant to occur? So I can create a variable in this called planning headroom, which is how much more density, how many more dwellings can you fit on this site based on the current plan. And if we look at the totals across those sites, we see that they had 36,000 dwellings in 1996, $48,000 in 2016, but the planning headroom, or the zoning yield, how many additional dwellings you could produce within the planning code, went from 33,000 to 66,000. So the ability to develop these sites grew extremely rapidly through that area as the plans evolved. And this is the type of data I'm getting. I can see the lagged planning headroom. So 5 years in the previous period, how many new dwellings could I build on this site in the current planning code? And what you can see is a lot of dwellings were developed within the current use. So for example, if you're in the detached housing area, you can subdivide your lot and build 2 detached housing, but I don't account for any planning headroom there because that's not a change of the use type into a higher density type. So a lot of that occurred. And my planning headroom variable is a very good estimate of the actual change in density that did occur when these sites were developed to take advantage of higher zoning. But most sites didn't change uses. This is the interesting sort of part of where I'm up to with this data, is that there is no relationship between planning headroom, so how many new dwellings you can build in an area within the planning scheme, and the price, which you would expect to be negative if you believe this bad housing economics that, oh, planning headroom constrains supply, and if you change it, people will anticipate that more supply is coming and that will suppress prices. There is a positive relationship between planning headroom and new dwellings, which I interpret to be that new dwellings are built where they're planned. So if you look on a site-by-site basis, obviously the sites where you've planned for higher density get more high density than those where you don't. And one of the interesting things in the literature is that a lot of people take that evidence that sites zoned for higher density get more dwellings compared to sites that aren't, or zoning that restricts changes in use is effective at doing that. They interpret that as some kind of like bad thing, and I interpret it as, well, zoning works. It allocates geographically where new development happens. That's not a sign of a negative, that's a sign of it's effective. But the more interesting thing was that there's a positive relationship between the new dwellings supplied in an area and the price. So out of those 19 areas scattered around Brisbane and Southeast Queensland, the areas that had more supply went up in value more than those that had lower supply, which is the opposite of what you would expect if you believed Glazer's view that it's a very supply-driven, price is a supply-driven thing and planning is the thing that constrains supply. And even more puzzling was that 71% of sites that had positive planning headroom in 1996 had no redevelopment in the subsequent 20 years. These are sites, detached houses where you can build high-rise industrial buildings where you can build medium density dwellings. The majority, 20 years, no, we'll still wait. Interesting. Keep that in mind. You've got this option to build lots of density, but you're choosing to wait. That means that one of the insights, I guess, is that new housing is a choice about timing as much as it's a choice about the density. Also, in these, about 25% of new dwellings came from subdivisions within the same use type. So that's detached houses being subdivided, for example. And that was 48% of the number of use changes by site. So I've been, I've started with this on my intellectual journey, assuming that Ed Glazer is right, being triggered to actually look into it because it seemed implausible when the results were put into an Australian context that I knew, realizing that it was completely wrong, looking at land banking, understanding that developers are asset managers of housing lots who don't flood the market as quickly as they can, and looking at practical examples of where higher density zoning has been implemented, just as the Yimbis and the politically active housing economists say we should do. And all I found was a positive relationship with price rather than a negative relationship with price from this additional planning headroom or zoning yield. So I've come to question just about all of the bad housing economics. So what did I think a good housing economics looks like? And when it comes to understanding the rate of new supply across all potential development sites in a region, I think the issue is about timing. And that's where the economists are getting unstuck. And they don't have an answer to this question. You're a housing developer with a large plot of land at the fringes of a major city with no planning constraints. How quickly should you sell these lots to supply them to the housing market? Now, it makes sense that we're not going to have one auction on Saturday and sell 5,000 lots in a city or a town like Gladstone. And I use that example because when I looked at the annual reports of the listed housing developers, one of them actually had a subdivision in Gladstone with 5,000 lots in it. How many did they sell per year? One. Hang on a minute. Hang on a minute. So how quickly should you sell them? Why would you sell one out of 5,000 in Gladstone rather than 2,000? What's stopping you? So the real puzzle is how quickly you sell. And I think the big point here is that density is not the same as the rate of supply. You can build a very dense housing development and supply it very slowly. In fact, when I'm developing a sort of dynamic model, and what it shows is that a sequence of dwelling lot sales is maximized when the gain from delaying a sale to the next period is equal to the gain from selling this period, so that you're equally well off from delaying that last sale. And then you pick a rate of supply, a sequence of sales that maximizes the present value. And for some reason, nobody has thought about this yet. So I'm currently, I'll send you a draft paper. If you read this second link here, if you go to my website, Fresh Economic Thinking, a housing supply absorption rate, you can see where I talk through this new way of thinking about sequencing sales and what's really constraining supply. And the factors there at play, and that's this sort of new dynamic approach, are the rate of change for the demand for owning housing as an asset. What do I mean by that? If you're a housing developer, when you sell a housing lot, you are swapping an asset, a housing lot that's on your balance sheet, for a different asset, cash, which is on your balance sheet, right? And you're swapping the value at a 1-for-1. So it's a swap of two different asset types. And so, you know, you already have that value before you sell. You don't have to rush off to sell it to get the value. You own it, right? Just as the buyer wants to buy an asset that they think has a return. So the factors at play here are the relative return to waiting, holding that lot undeveloped, and converting that lot into cash. And what you find is that when demand growth for that asset is high and the price is rising quickly due to the sales across the market as a whole, it's optimal for you to sell more quickly and convert to cash, because the negative price effect of you flooding the market is lower. Do you know what I mean? And if you're in Gladstone, where there's hardly a very thin market and no one wants to buy, then you can't really sell too many because the demand growth is not high, and anything you sell is depressing the price. And so you end up with a very different story. The price level doesn't really matter to the rate of supply. The rent doesn't matter. All that matters is the dynamics of the asset housing market, which is why housing construction follows the price cycle so very well, because it's optimal for those who own lots to follow the cycle with the new supply. So that's where I'm up to in my journey from spotting bad housing economics, deciphering it, and learning from that experience, looking at the annual reports of housing developers, learning from how they explain what they do, to trying to forge a sort of good housing economics that looks at the process of housing supply dynamically. Now, if you want to keep it up with my thinking, I blog very regularly just about my thinking while I'm writing papers and things at Fresh Economic Thinking. This absorption rate, this new dynamic approach, there is a sort of post on that that gets into a lot of detail. All my articles are on Google Scholar, and I'm on Twitter every day. So I'm going to wrap it up to take questions. But before I do, if you want to delve deeper into the housing supply story, how it might relate to affordability. Is housing supply, I think you can guess from my talk today, what side I'm on. The 8th annual Henry Halloran lecture is next Thursday, and Ian Mulhern is speaking from the UK. And he has a very interesting story of his research on housing supply in the UK and how he came to very different conclusions from the typical economist. So thank you. I'd love to take some questions.
Great. Thank you, Cameron. And I'm sure we'll get a lot of questions. So there's a few already starting to pop up in the chat. Might start with the first one that I can see there, which is there some ambiguity around the different status of options on sites versus sites legally owned? I think that one is from Hal.
Yeah, so if they're talking about in the annual reporting data of land developers, whether they are reporting the land banks they have options on. I had this question once before and I looked it up, and they do include joint venture lots in their consolidated reporting. And I can't tell you with confidence whether they include lots that they own options on the site. My best recollection is they don't.
Okay, great,
but I don't think that really matters in many ways. I mean, your option is a legal right to that land. If you want to develop, you strike the option. The person can't say no once you've established that. So, you know, I think it should be included. I can't recall if it was included in that data.
Great. So we'll move on to another question now, which is, if gaming the planning system is necessary to strengthen property asset base and improve profitability and deliver housing needs, how much of this problem, how much of this is a problem and who loses?
Who loses? Yeah, that's a big question. So I think that question is about developers seeking rezonings to increase the value of the sites they own. So it increases the value and it enables them to produce more houses, but it might not necessarily change the rate at which they produce their houses. So it improves their profitability. That's fine, but that's not a free lunch, because what you can do is you can sell additional property rights to high density from the community. And we know you can do that because Sydney did it for a few years with their betterment tax in 1969 to 74. The ACT does it, Sao Paulo in Brazil does it. Many countries have systems of regaining that value for the public when a planning regulation is changed that dramatically increases the value of land for those landowners. So that who loses is the public, because the counterfactual is that we get the value to share for the community rather than the shareholders of that company, who it literally goes to the bottom line. And one of the interesting things I find just on gaming the planning system is that a lot of developers, use the argument that, this area needs more housing. You've got to rezone I bought a farm. I bought an agricultural operation zoned for agriculture with the intention of building housing. And they argue that, this area needs more housing. And my response is, well, why did you buy a farm zoned for farming when you want to build housing? Go and buy another site where it's zoned for what you want to build. I find it a real puzzle that housing developers seem to be so bad at buying sites to build what they want to build that they have to keep asking for rezoning all the time. I think, we should look at this completely the opposite way in many ways. And so if you want to build a high rise, go and buy a site that's zoned for that. There's plenty around. It's not my problem that you buy a farm and want to build houses on it if the community doesn't want it there.
Yeah, that's a very good point. So we might go to another question here, is that, do you think that US commentators are very zealous about rezoning as a housing strategy? Because in some US cities, supply is constrained by citizen activity, and a follow-on, should we time out rezonings like DAs if no housing is constructed?
Yeah, the timing question. I think it's very difficult to have time-consistent regulatory regimes, because in 5 years there'll be a new government with a new agenda, and they can always just change things. What you can do, I think, is better, is to time out rezonings with an infrastructure charge schedule that rises over time. So if you accelerate it, we will subsidize we'll charge you a lower infrastructure charge from the community. But if you don't build for 5 years, then you have to pay double, because you told us you were going to build housing here quickly, but you didn't, you delayed it. So we're going to punish you with this charge that's going to rise. And so, if you have specific area plans where you're trying to get more density, accompanying them, you can have an infrastructure charging system that ratchets up over time to penalize delaying and get that accelerated. So I think that's how you do it. In the US, some cities are more constrained, but I don't, I think my general view is that the idea of planning is to create certainty and coordinate so that people who live there know what to expect, and people who want to develop there know what to expect. And I think a lot of US cities, the sort of the general rights of citizens, and I think it's a function of much of the history of the US legal system, if something's within code and the plan is approved appropriately, etc., it should be difficult to say no to that, regardless of who complains. And that's how it is in Brisbane, for example. If it's outside the code and you're bending the rules, or you're making an argument for something different, then then it's a consultation. It's it's a bargain with the community. So I think that's those two answers. I think US cities, the planning could be more certain by reducing the options for outsiders to delay or intervene when things comply.
Great. So we have another question. So how could changes to the tax system target this land banking problem you have identified, especially in the context of land tax coming into the mainstream?
Look, there's a lot of ways you could do it. That's a good question. So, I mean, you can tax land at its highest value use, right? But that's politically very difficult, because when you rezone, you change the highest value use, and the land tax increases dramatically on everybody who owns land there and who has invested based on the previous zoning. So it's very difficult. I mean, that's what you should do. I think also, if you think land banking is a problem, if you think housing supply is insufficient, you should build more houses. And that's another puzzle in this sort of economic reasoning, is all these people say there's not enough houses being built, but none of them say we should just build houses. Just get a government department, the house building department. No one complains that, oh, not enough roads are being built. Oh, maybe we should do a tax break for concrete. Makes no sense. What you do is you give money to a department whose job is to provide that thing, and then they pay people to go out and construct those things. And I think it's it's almost a good indication of how people don't really believe supply is a problem if they're not arguing to build more houses. And I've proposed, if you go to my blog, a central housing bank, where we essentially adopt the model of the central bank, but for housing. And what we do, the central bank floods the market with money to depress the price of money, which is monetary policy, right? Well, a central housing bank could flood the market wherever it wanted with housing to depress the price of housing. And I've had some curious responses of some people saying, but that'll never work. They'll never build enough houses to depress the price. I'm like, but you're the one that says rezoning is going to flood the market and depress prices, not me. I'm using your economic logic to reduce houses, but when it's not the political response you want, you change your logic. Yeah. So I think that's quite interesting.
So another one there, why don't planners charge for development rights?
Politics. I call the Queensland government the property development mafia. And the previous question about land taxes, there's a section, 45C or whatever it is in the Queensland Land Tax Act that gives people who subdivide lots a tax break so that they don't have to pay land tax while they're waiting for the market to sell their lots. So if you're a Stockland or a Lend Lease and you've got a large subdivision with thousands of lots, you would obviously be up for land tax at the high value because you're an owner above the minimum property value threshold. But they would say, no, we're a producer of new housing, therefore, we're not an investor, we're not owning this as an asset, it's an inventory. So what we're going to do is don't start charging us land tax at the new use until we sell it to the first buyer. So there's a sort of land developers discount in the land tax code. So the reason for all this is political, but I think there's a bit more of an appetite now for charging for development rights just because they're so valuable. I have a mate who is trying to come up with a better method for estimating, but he reckons something like $19 billion last year across Australia came from the value difference between the site at its current use and the site at the use it got approved and developed for. And we can regain some share of that by charging. And Canberra does it, so we just got to go and copy them. No one can complain it doesn't work.
Yeah. So there's one here, and I'm not sure whether you can speak to it or not, because it's more about retail zoning rather than housing, around the federal government grocery prices inquiry. Found that due to a lack of retail zoned land, it had upward pressure of groceries because new supermarket entrants couldn't find suitable sites.
Yeah,
so,
I remember that. So
yeah.
there was an inquiry. I think it found that there was no real issue there. That I don't know if that's the author of that paper that found that the rate of new Aldi store formation was unchanged prior to a large retail rezoning. There was a restriction on sizes, but there are other hidden rules. I do know that there were rules around minimum sizes for supermarket type regulations that Aldi didn't hit when they first moved here, and they had to lobby to relax them and say, we're actually a supermarket, but we're just going to be smaller. And obviously the other supermarkets said, no, they're too small. They don't get all the supermarket exemptions to the design code for retail stores that we get. So definitely the rules can be used to prohibit competition.
Yeah. So the zoning system was created to keep residential houses away from the pollution of heavy industry. Now that we have far less heavy manufacturing, what should our zoning system be designed to optimize? Could optimizing social capital work?
Oh, that's an interesting thought.
Yeah.
My view is generally that there are still many conflicting uses, but the way I see zoning is a coordinating mobility. So I think the zoning system and the transport planning and investment system should mesh together well. And that's how you should think about zoning is, well, the reason you control uses is because that location has a certain accessibility, and that's how we're going to deal with it. So it might be the case, for example, that existing suburbs with a lot of detached housing are very difficult to retrofit for the accessibility or transport access you would need for a high density suburb. It's one of the problems in my area in Brisbane is that we've built 25,000 new apartments at the end of a single lane street, and there's one bus. And so the road network doesn't cope. So the question is, well, if we wanted to zone, maybe we should have planned for the transport investment at the same time. These things should be working to maximize accessibility across an urban region as a whole. So that's kind of what I would say. Social capital, if you've maximized accessibility across the urban region, that means people can interact efficiently and cheaply and quickly. That's how so I guess the output is related to social capital. Yeah. In my opinion.
Another one here around Sydney water infrastructure planners argue that without zoning, the constraint on how supply is water infrastructure, provided water supply is mandated. What is the economic perspective on this?
I don't know what Sydney Water says about it, but I don't think it's that difficult to get more water. We have a desalination plant up here. It's expensive, but I guess so is not having a lot of houses. Yeah. So I guess I don't see that it would be a constraint. I think the mechanism for that to stop development would be difficult, and I think you would just build a desalination plant. That's the practical outcome. I mean, I think Victoria has one, we have one. They're becoming more common in many cities.
So we've got one more question in the chat that we might go to, and then I'll take the chair's prerogative and ask one final question after that. But the UK planning system doesn't have zoning, only merit-based assessment. Would that be a better system for us?
Yeah, look, I'm not keen on that. So I guess in Australia, most cities, states, councils have a combination. They have a sort of zoning or a planning code, and then they have a performance-based approach to assessment. So I think that is not too bad. The problem with the merit-based assessment, I think, is you lose maybe a lot of that coordinating role of planning, because people in an area make a lot of investments. They go, I'm going to live here because I expect this. Well, I can see that with a sort of zoning code type planning document. Whereas if everything's merit, you know, in 5 or 10 years' time, very persuasive, politically connected people might just argue for something completely unexpected. So I think if you see a value in planning for coordinating investment, both transport and built, you know, environment on private land, and then I think zoning is a very good idea. So it's interesting though that in the UK, the debate now is we need zoning because the merit-based assessment system is really bad. And in the US, they're saying, let's scrap zoning and just have the merit-based assessment because zoning's bad. So I think that's another indication that people really haven't thought through what's really going on. And I think, you know, as a big picture comment, it's very interesting that, you know, people think, and are rightly so, that property developers are well politically connected and they get what they want from politics, right? We see that with rezoning decisions. Is it also true that they're really badly politically connected, and that somehow they can't also remove constraints on them selling new housing quicker? Like, it can't be both. They can't be well connected and get policy changes they want, and also somehow be bamboozled by a few local residents or a few planners in the council. I think that's another sort of conflict in the logic of the sort of standard view or the supply side view.
Great. So we've had just one more question pop up in the chat, so we'll get to that and then we'll wrap up. Just conscious of time, but also an interesting suggestion there. Can we organise an event with you and Glazer and Ed Glazer and get his response? That'd be cool. Next Festival of Urbanism.
I think we should try and get him here next year,
yeah.
because, but I think you've got to understand that he can't change his mind. So it doesn't matter what the evidence says from this point forward. He has a reputation, he has a social network, he has people who rely on his findings. You know, they say, what do they say? You can't get a man to see the truth if his income relies on not seeing the truth, whatever that is. And I think if you're a professor at Harvard who's been saying this for 20 years,
yeah,
you can't change your mind. You need these fruity, nutty people, these rabble-rousers, like me, who don't really care, and to be able to say that. And I think that's true even in, you know, the Reserve Bank, large institutions in Australia. That's also still true to some degree.
Yeah. You've got nothing to lose. So one more. So why do you think Glazer are not talking about how much influence developers have in the zoning process? Is supply directly proportional?
Yeah, well, I think that's because it undermines their logic, right? Because they're saying the poor developers, you're constraining them. They're just politically inept. They just don't know how to get what they want, right? And those nasty retirees who got their local solicitor to write a letter just bamboozled them. You know, and if it's also true that we're, you know, planning constrained supply, they shouldn't be making much money, right? It should be a very poor sort of industry to be involved in if you know, if the planning system is so bad and constrains their supply. It should be, you know, it should be making terrible money. But the opposite is the case, obviously. And you know, I think that's right. You can't see it that way, you know, because you have to reject this thing you've built your career and your sort of academic reputation on. You know, you can't drop that to believe something different.
Great. Well, just a reminder to everyone, so we're just about to wrap up. All of this will actually be a recorded presentation, so you can access it after the festival. And we've had a question around the slides. Perhaps it might be best to contact Cameron directly.
I'll put them on my blog. How's that?
Yeah, there you go, on Cameron's blog. So just to close up, Cameron, thank you so much. And just to put you on the spot, what is one key takeaway that you think from your research that we could use, or at least how to communicate to those who make decisions that would make better places, to bring it back to the...
Look, I think a key useful thing when you're having discussions is to explain that density on a single site is not related to the rate of supply of dwellings across the region. So when someone argues, I need more density to supply more houses, you say, well, why would you supply quicker? I'm just giving this away. So I think being clear that density and the rate per period of time across all sites are completely different concepts and unrelated can help you to diffuse some of these arguments when I know lots of developers argue that they need more density because of affordable housing and they're going to build all this supply. Just remember they're different concepts, and many other people get them wrong or confuse them.
Yeah, great. Thank you. And that's it for today's session. Don't forget to join us for our future events, which we're not finished yet. And thank you.
Thanks, Sophia.